It's been a long time since I had you on the show, so I'd love to get your take on the roller coaster ride silver has been on from around $30 at the start of last year to a close of over $116, a new all-time high at the end of January this year, subsequently crashing 26% in a single trading day, currently hovering around $73 an ounce. What do you make of this price action? And do you think we make new all-time highs in 2026?
Well, the short answer is yes. And we'll get into the longer answers. Of course, again, I always have to caveat I'm selling my book, but a lot of us in the space are very bullish on silver. And of course, we have a bias. And of course, we have a conviction. I think when you're talking about silver, whether you're talking about any commodity or we're talking about precious metals, it's a different answer depending on the audience, depending on what kind of investor they are, whether they're swing trading or they're traders or they're long-term investors, they're wealth preservationists. What is their time horizon? Is it a month, a quarter, a trading day, an hour? Is it 20 years? So it's a different answer depending on who's listening in a sense. But of course, at Von Greyerz, we're purely wealth preservation. We've been that for decades, and that's not going to change. We understand silver as the mama metal is gold and the baby metal is silver. It has a much better beta when gold's on a bull run. But we look at silver and gold as monetary metals, and we look at them as wealth preservation tools. And so our horizon is many, many years. So I have to caveat by saying that, because I think if you're trading or arbitraging or spread trading it, even the best traders I've seen in this space, I know a lot of them aren't very successful because there is a lot of volatility based on headlines and price moves and commodities in general, and silver in particular, with all the mechanizations in the COMEX market starting in 24, which I've written about a lot. But I think at 30,000 feet, keep it simple, stupid, because we understand it as a simple long-term play. I mean, silver is a supply and demand mismatch that has a fantastic setup if you're patient and you have a longer time horizon. And for me, again, silver has seen 5 consecutive years of 200 million ounce supply deficits. And, by Silver Friday of this January, we were looking at $1 billion in silver deficits. And that supply crunch with that demand rising is a perfect setup longer term. We saw the LBMA seize up last October. There just wasn't enough metals to meet delivery. In New York, on the New York Exchange, whatever you think of it, and gosh knows I don't think very highly of it, you had a ratio of, the COMEX's registered silver, that's available silver for delivery, versus the open interest, which was the paper claim demand for delivery. You had a ratio of 7-to-1. At some point, and again, regardless of whether you're bullish or bearish or cynical or not, that supply and demand mismatch has to play out in normal price discovery, despite all the mechanizations we've seen on the COMEX, really since Trump was elected in November of 24 and into the first year of his term. The mechanizations we saw in December of 2025, and then again in January on Silver Friday when they were raising the margin hikes, all these efforts to manipulate the silver price because they had to raise margins because they didn't have enough actual physical gold to lever the paper price. So it was a fascinating moment. I think these exchanges are really pacing towards a cash settlement only exchange. In January, we saw 20% of gold leave in a week of their silver in a week. I think that was JP Morgan. You don't know, they don't have to report it. But the big banks were pushing the price down to get themselves out of a massive short squeeze where they were upside down to a survival level. And then once they pushed the price down with the margin hikes, they then were accumulating the metals. And so it is an insider game. We could spend hours on that, but there's no doubt that there was a need to save the banks and a bailout in January on the silver market in New York. They did these margin hikes that they've done many times in the past. Those mechanizations may seem too big to fail or too powerful to beat. I disagree. I think the COMEX and the LBMA markets in the silver space in particular are losing credibility as fast as they're losing actual silver. And I think you're going to see from India to the SPIMEX to the Shanghai Exchange, whatever you think of those jurisdictions or those governments, you're going to see fair price discovery, and you're going to see a point where supply and demand actually matter again, despite the paper trade. You could get into the technicals on the futures market. There was backwardization. When the current prices were higher than the future prices. That always, for me as a technical trader, signals a higher demand and a supply shortage. And, when you look at the lease rates of silver, I mean, my whole career, they were never above 2%. They went well above 8%. In fact, they were usually less than 1%. So again, whether you're looking at it as a trader, and we're looking at it far more as a long-term play, as a monetary metal, you simply can't print more silver, just like you can't print more gold. And I think the military and industrial demand for silver is going to increase. I mean, silver, as many of your viewers know, is a byproduct. It's mined. It's a byproduct element, and 70% is byproduct mined. You just can't increase the supply with a button. You can't mouse click it. You can only play with the paper prices. And I think whatever we think of this war, which we can get into, or whatever we think of inflation or the deflation, crude at 100, and where's silver going to go longer term? Oil inflation is not the kind of inflation the Fed can fix. It's not the kind of inflation that can be cured. And for each $10 price in oil, inflation raises by 1.01%. But again, the longer inflation deflation discussion comes in from both gold and silver, but silver is going to outpace gold in that next bull run. It doesn't mean gold or silver go in a straight line. You could say silver's broken a lot of hearts, but if you bought it at 15 or 20 or 30, are you not entertained? Even with the pullbacks, if you are a long-term investor, you're not the least bit worried. If you're a trader or trying to get out and get into mining, you have to call it. I think at some point, we always think of gold, though, as the ultimate preservation asset, and silver, as Egon says, is not for widows and orphans. It can break hearts. But when you get to ratios, the gold-silver ratio, I think we're going to see new compression, new record compressions in the next real bull market in gold. And at some point, as we say, you'll make a very good return on silver. We don't like to price target because we're measuring that in fiat currencies. I'd rather measure silver and gold and how many barrels of oil it can buy, how much real estate it can buy, how much assets it can buy, not what the monetary price is in some fiat currency. But $300 silver, $400 silver, these aren't exaggerations. If you're playing the long game and you're not trading, it's just a question of when, because the fundamentals for the monetary system and for paper currencies haven't changed. And so silver will have its time. It's not as discussed. I'm glad you asked that question about silver first, because very few people do. But for the patient investor, not the trader, who understands the story or the narrative for precious metals in general, including gold, silver is still very much in the first innings. And again, we're selling our book, but it's an absolute conviction. We're not alone. And whether it's gold or silver, you got to watch what the banks and the traders are doing versus what they're saying. And you got to look at the supply and demand forces, which still matter. And you have to determine for yourself what your time horizon is. For any of us who bought silver, whether we bought it at 70, 60, 50, or 90, or 10 or 5, we're patiently waiting for that compression in the ratios. Probably at that point, when I see a gold-silver ratio in the 20s, 30s, or below, I'd sell some silver and just buy more gold. That's a long answer to a short question, but the short answer is we're very bullish on silver. Egon is particularly bullish on silver right now. And we're not alone. Outside of the commodities space or the precious metal space, a lot of equities and credit jocks are accumulating silver at pretty rapid amounts right now. And I think it's a Boxing Day sale for silver right now, if you understand its long-term play.